Thank you, everyone, and welcome to today's edition of Frontier Opening Bell. It's the 21st of September. I am Bosin Omofaya, and joining me, Chima Okadike, who is in charge of consumer goods analysis and research at Verteva Capital Management. Good morning, Chima.
Good morning, Bosin. Good morning, everyone. It's nice to be here.
Thank you. It's good to see you, and hope you enjoyed your weekend. Ali Kansacho, the CEO and founder at Bridge Frontiers Management.
Morning, Bosin. Morning, all.
Thank you so much. Let us get this the third week in September up and running with the markets review for last week. Friday, the Nigerian markets on a weekly basis went down softened about 0.1%. The Ivorian market was deeper in the red, 0.46%. The Egyptian top 30 finished 11,000, 0.50, also in the red. Kenya market softens about 0.5%, and the South African GSE fell below the 55,000 level by 0.66%. Let's look at East Africa, where the Rwanda's GDP was the top story in terms of the GDP. Second quarter down 12.4%, a very hard landing for this country that did massive lockdown with the virus. Centum has a new group financial director. KenGen is also making an announcement regarding sale of some of its carbon units. And in Ethiopia, it's all about power, trying to get electricity up and running. Ali, Rwanda here is a big story on top of the table.
So, I think Rwanda imposed a very hard lockdown. And what we've seen is when we've had hard lockdowns, we've had big hits on GDP. And South Africa is another example. And Rwanda was on, if you look at a continuum, imposed a very hard lockdown and a very effective one. They were sending food to their citizens in their homes. Really a very effective response by the authorities in Kigali. But obviously, it's given the economy a big knock. The challenge, I think, with this is, if we look at the caseload, Africa is looking relatively good, with the exception of South Africa, which is now emerging out of, has now moved into level 1. So, the actual medical emergency seems to be under control to many degrees. The question is the economic emergency. And in these Rwandan numbers, you see precisely that point. Deaths were low, infections relatively low, but big hit to GDP. And it's going to be a balancing act across the continent as to whether economies now look to open up, how dramatically they can catalyze an economic recovery. And then, the virus, the microbe never really goes away. If you've got a few cases, look what's happening here in London. All of a sudden, you've opened up and boom, the numbers start to climb exponentially. So I think Rwanda is a microcosm of the challenge that's going to be faced by every African country as they seek to try and engender an economic recovery. And for purposes of Africa, I think the economic emergency has been far greater than the medical emergency. And that's the point. You spoke to Ethiopia, Fortescue's $10 billion investment into wind power. The interesting point with Ethiopia is you would have thought that with the Gerd Dam, notwithstanding plenty of noise and all the drama we've had around it, but they've had some good rains, so they're filling that dam up. Let's be frank about that reality. But my issue is, where is all this energy going to be used? Because at the moment, somewhere like Kenya has a surplus amount of energy on the grid. And I would have thought once the dam is in play, Ethiopia will be similarly in surplus. And the question then becomes this big project by the AFDB, the interconnection project, where you'd be able to move power across the East African region. And I think that needs to become a reality quite quickly, Bosin, if we're going to see these investments pay off in the medium term. You made two corporate announcements. You were talking about Centum. Centum, of course, is a conglomerate, has its finger in the banking business with Citian Bank, sold some bottling companies recently, big investment in real estate, which of course has come under pressure. This was their very iconic shopping mall complex where Old Mutual took 50% share. But they're very, very sharp investors. They're in, they're out, they dilute their risk. They're impressive, but the share price has underperformed the value. The chief shareholder, Chris Karoubi, was looking to buy more shares in order to try and bring that discount to net asset value to narrow that discount. So I don't know what's happening with that. But it's been a tough year for the stock market here in Nairobi, as we all know.
I get it. Quite a whole lot to squeeze together here within that region. Let's get a bit of a sense of West Africa's markets in Nigeria. By the way, starting, of course, from some of the stories we're getting from the insurance sector. The deadline is December for them to recapitalize. Prestige Assurance is extending the offer period for its rights issues by 2 weeks, 13.6 billion. ICO Insurance is doing another recap, raising exercise of another 3.48 billion rights offering by investors. The sector regulator says any insurance company that has outstanding claims by the end of the period and more than 6 months on the books may not be allowed to cross the finishing line. Meantime, NNPC is opening the bid for the rehabilitation of its pipeline network, which has been seriously damaged over the last couple of years. The pipelines were shut down a few days ago, about a week or so ago. Now they're getting bids on how to get them back. Transcorp Hilton is Nigeria's iconic hotel and says it's cutting workforce by 40%. All executives at the headquarters in Abuja will have to take a pay cut. Meantime, Togo here in West Africa, just next door to Nigeria, so about 0.8% decline in consumer prices the month we finished, that's August. Uchima, come in here on this.
Thank you very much, Basim. So the major story here today is the news about the insurance sector. We're seeing that the NICOM body has decided to extend their recapitalization deadline to September 2021, which I think is very reasonable considering all that has happened in the past year, given the pandemic and all that. And we're seeing that most of these companies are trying to shore up their capital in compliance with the regulation by rights issues and all that. One surprising one for me, I think ICO that is trying to raise capital of 3.4 billion. I think their capital requirement by NICOM is about 10 billion, if I'm not mistaken. And I think that they have done well above that. So they are one surprising one that they are in good standing and they're still trying to raise more capital. I think that is very good. You can never be too safe, especially in the insurance sector, which is a very important sector in the economy. So I think that is a very good one for them. And also overall, although one of the challenges that faces these companies is the demand problem for Nigerians. When I have the opportunity to talk to my colleagues or my friends about insurance, many of them don't really care about insurance. They don't really see the need or the point of having insurance. They believe in the God factor. So I think that is one challenge that these companies are facing to grow their premiums and their revenue sources and to grow their retained earnings, to grow their capital base. But overall, I think that this is a very good story for them. The extension of the deadline is quite good for them. I'm talking about the NNPC that is opening bids for the rehabilitation of the pipeline network. I think that is very good as well. We always need all the help that we can get, especially given the fact that the government's revenues, they are really pressured with pumping in money to fight the effects of the pandemic on the economy and to help MSMEs and other households and the likes. So whatever help that the government can get is quite welcome. So I think that opening the bids for investors to try to rehabilitate the pipeline network is quite good, given that many of these investors, when they have skin in the game, their output tends to be a lot more significant. They tend to be more sophisticated. They probably will be able to put in more advanced technology in protecting the pipelines from vandalism and all that. So I think that is very good in terms of shoring up wealth down the line, and in terms of protecting the already scarce revenue that we have. Looking at the Transcorp Hilton, that is looking to cut about 40% of their workforce. I must say that is very significant, although it was quite expected. If this is the first, I'm not very sure if this is the first cut they've made since the pandemic started, but if this is the first cut they've made since the pandemic started, I think that is very remarkable, especially given the effect that the pandemic had on hotels in particular, the hospitality sector in particular. People weren't going anywhere, people were just staying in their houses. And so, given that they've been able to stay strong this long, I think that is very remarkable. However, when I look at the fact that all the executives are starting to take pay cuts now, I would say that they are quite late to the party. I know that many people, even people that were able to continue their businesses during the pandemic, needed to take pay cuts as early as April. So I think that they may be a bit late to the party, taking a pay cut now, but it's all good as far as they are. What?
Better late than never.
Better late than never.
Better late than never. I got a question for you, Chim. I want you to think about it for just about a few seconds. When hotels like Transcorp Hilton cut back on pays and things, leads their businesses down, what that means for consumer goods space in Nigeria, the suppliers of Milo, Bonvita, the toiletries, the big names in the rest, what it really means for them going down the line. I want you to think about it. Give us your thoughts about that, because when you look at Hilton, where biggest of the conferences are held in Nigeria, big government patronage, big private sector patronage almost on a daily basis, all the rooms are overbooked, all the restaurants are all beaming with hundreds and several hundreds of people, like a beehive on a daily basis. Taking a 40% haircut on number of staffers, about 900, cut them by 40%, means quite a lot for the consumer goods space down the line. I'm sure you have some thoughts on that. Let's check in with South Africa, because the South African Airways, I think the government wants it to be ready for October 1st resumption of international flights in South Africa, according to President Ramaphosa last week. So the government has pledged $650 million US. The administrators to SAA says they want the money. Within a week, they put the money out. That's good news. RMB Holdings reporting 111 million rand revenue for the year ended July. Spar Group says sales up 12.4% during the same period, making about 112 billion rand. The Investec also expects first half profit for next year to slump a massive 68%. Ali, getting the SAA back in the skies looks like something they want to get done before October the 1st.
Yes, I think they've now finally made the decision to support the airline. I mean, this does not detract from the fact that they've had enormous corporate governance issues at SAA alongside a number of their other state-owned enterprises. And the bigger problem, in my view, remains that air travel has slumped in 2020, and I don't see a big recovery even into next year. And African airlines in particular have found themselves at the bleeding edge of that slump, with the exception of Ethiopian Airlines, which has significant advantages. It's not unionized, the pay is not as high as other airlines, and frankly, they've run it more efficiently than their peers. We've got to be honest. The question many people will ask is South Africa throwing more good money after money already gone bad? But let's just say that this is going to be a positive signal. And of course, SAA supports the South African tourism industry, which is really substantial. And now they've moved to level 1. International visitors are surely going to come back, and the South Africans will be wanting to encourage that as much as possible. The Johannesburg Stock Exchange, after a great run a few days ago, it had 7 winning sessions, has had its worst run with 5 losing sessions since May 2019. And you see that in the results you were referencing. SPAR, this is groceries, well-priced, competitive. These companies have done very well globally. You look at all these numbers, they all look great. Against that, you had RMB and Investec, which are financial services and financial companies, struggling. RMB, 111 million rand. I'm sure they consider that a poor performance in the context of the business. Investec, it's been tough for insurance companies all over, and particularly in South Africa. Vivo Energy is an interesting business. They're big in Kenya as well, big sub-Saharan African presence, and I think, very interesting play on retail, the forecourt, the demand for fuel. I think I would put Total and Vivo at the ahead of the curve, maybe Engen as well. But these guys are big winners, I think, in the game. But it's an interesting time at the moment, and I think for me, I think uncertainty will continue for a bit longer than many investors are hoping it might.
Quite a whole lot within the Southern African space. I agree with this level 1 and the reopening of international flights from about a week from now. Let's see what happens and see if they'll be able to get tourism bite back a little bit from tourism and leisure, entertainment, and what have you. As we see some of this reopening here in Lagos as well, isn't it, Chima? Over the weekend, the Lagos State government announced that gyms and cinemas can reopen. I can't wait to get back into the movies myself. Sometimes you get tired just watching the movie alone at home. You want to feel the audience and the big screen in your head. So you want to see the movies. I miss the movies a lot. So I don't mind the 30% capacity. Yeah, so we can get it done. Isn't it, Chima?
I agree with you. It's a fun thing to see now that everywhere is being opened. So like you were saying with the cuts in staff strength for TransCore, the effect we'll see on the consumer goods sector is not exactly as a result of yes, we'll see that the reduced income or those people going into unemployment or finding other underemploying jobs may affect the level of spending they can do on the economy, affect the consumer goods sector. But I will look at it in terms of what this means for TransCore to be able to cut or to be willing to cut about 40% of their staff. It means they're not getting as many businesses as they would like, as many customers coming in. They don't need as many people for their operations as before. And this goes to show that we should see that affect the consumer goods sector directly, because we will not be seeing as much patronage, like you said. Their provisions, their other durable consumer goods they would not be having any need for that, and it will directly affect their revenue sources as well. So I think that would be one to watch out for. Although as we go into this quarter and the next quarter, as we end this quarter and go into the next quarter, as we have been seeing, I'm sure you have seen that a lot of people are now out and about, going for parties, going back to the clubs, and just, having fun. We should see that affect the economy positively. We should see that affect consumer spending, and we should see that if we go around this cycle and come back to be positive for the hospitality sector as the economy reopens.
So the reopening of the cinemas, even though at 30%, and gyms and spas, do you think this will also help the consumer goods, probably not the big names such as Cadbury or Lever Brothers and whatever, Unilever, perhaps the MSMEs, because popcorn, for example, I'm sure popcorn must have suffered very greatly during this theaters lockdown, isn't it, Ali?
Yeah.
Popcorn and movies go together.
Of course, I think, popcorns, movies, anything. Restaurants have been suffering. but biggest sufferers have been bars and the like. I mean, you know.
I know in London, I know.
Yes,
I know.
and he wants to close them down again now.
just around the corner. Folks, I'm sure, I wish I'm in London to just see how this hard lockdown. Unfortunately, I was just seeing it on television. I wish I was there physically to see. It must have been really, really terrible. You come out of your office, just as you're going home, just folks just hang around, have a nice time before going home.
That's right.
And it's all gone.
Yeah. So I actually picked up from what I was hearing last week. A lot of people had actually started going back to the offices, particularly in the city. There was some activity, but obviously, you know, relaxing the rules has triggered this surge. And, you know, I think Boris is in a catch-22. You know, he can't win either way.
I know it's going to be a very tough one for him with Brexit hanging around the corner, knocking him from both sides. If he goes for hard lockdown and the economy nosedive, it's going to be a double whammy for him. He wants to see as much as he can use to get the economy up and go, and use that as a basis for negotiating trade and moving forward with the EU, not with outside the EU. And the clock is just ticking on a daily basis to the end of October to get this done. Very tough time. Let's finish off with North Africa very quickly and check in with folks there, where Libya is the biggest story. It looks like the warring parties have finally agreed to get oil production and oil exports back and running. This was some good news we found last week, by the way. In Tunisia, the foreign trade for the period of first half of the year, 57.278 billion dirhams, exports down 18.6, imports down 21.6. Ali, I'm sure we can all use some good news from Egypt as far as the General Khalifa and the rest of his crews are concerned, getting oil production and exports resumption.
Well, that's right. I think, you know, the Libyan situation has been very dramatic. We've had this proxy war going on. But now we had the announcement of the Erdogan ally in Tripoli that he was going to step down. And it seems to me that General Haftar has made some progress, and that means the Egyptian UAE side as well. Libya, of course, desperately needs cash. Libyan oil is quite cheap to extract, so it's quite profitable. And I think this is a pretty important announcement that they're going to start uplifting and exporting oil. So an interesting development and a positive one, and it speaks to a greater degree of security because they've lifted a force majeure on that situation. Tunisia, numbers in line with expectations, imports and exports, but I think Tunisia is more a tourism destination. They need to get the tourism going again as soon as they can, and I think that will be the most important issue for them. Just to tack back to Egypt, currency strong, good positive carry. The economy looks one of the stronger ones in this downturn.
Interesting. Thank you so much, Ali. On a final note, Chinma, give us 30 seconds to 1 minute outlook for the current trading week on the Nigerian stock market.
So last week, I'll start with last week. So last week we saw a mixed trading session. I think we had 2 bargain hunting sessions. We had 3 profit taking, 2 passive, 3 negative sessions, mostly led by the banking and the consumer goods sector, as well as some industrial goods and maybe some oil and gas stocks. At the end of the week, we saw that the markets, the ESI closed in the red. So going into this week, we saw that last week, consumer goods sector closed in the green, about 59 bips up for the day. We saw a big name like Dan Sugar close about 7% up to lead the sector to a positive close. So this week, maybe we might see some profit taking along that line, because what we had seen was we had seen profit taking, yes. Then when the price got down to some comfortable levels, we saw investors coming to bargain hunt. So what we might see this week, might see some profit taking as well, as investors just try to find a balance for that they're comfortable with. For the banking sector as well, we might see some mixed sentiment as well. Nobody is really certain of how things will play out. I know that before the banks, the stocks, the companies released their results, people were uncertain. Investors were staying away and profit taking on the stock. When the results came out and they were quite slightly nice, investors still came out and patronized the stock. And we were seeing that after their dividend deadline passed, we saw investors go out again as they had passed their line for dividend taking. So we should still see that investors are going to be trying to find the balance. I think this week will be for trying to find the balance. So I still expect a mixed trading week for this week.
Thank you so much. We can use some positivity. But right now, as we speak, the European markets has taken off on a very negative note. Again, the virus, the vaccine, and the whole uncertainty about the global oil demand is not putting markets on a very strong footing to start the brand new week. Tomorrow is Nigeria's monetary policy committee decision by the central bank. The meeting starts today to end tomorrow, briefing in the afternoon. So we'll touch on it a bit tomorrow. Then on Wednesday, we'll also try to put our hands around it when we get the numbers together. Thank you so much, everyone. Ali Kansachu, thank you so much from Frontiers, Rich Frontiers Management. Have a great day and a week ahead. Chima Okadike from Vetiva Capital, in charge of consumer goods analysis. Thank you so much as well. We thank you everyone for watching, and I'll see you again tomorrow.